Joining us now is Linda Eedes from Regarding Capital Management. We're talking about the Worldwide Balanced Fund effectively here under the name Global Flexible Fund, where Regarding Capital Management is concerned. Let's ask you for the underlying philosophy.
Okay, well, it's the same philosophy as for all of our funds, which is very much a bottom-up value-based philosophy. So essentially, our view is that our first step to growing capital is to protect it. The best way to protect capital is never to pay more for an asset than what it's worth. And the best way to grow capital is to pay substantially less for an asset than what it's worth. And this follows exactly the same process. It's bottom-up. There's no top-down macro view. We look at each investment idea on a case-by-case basis. And if it's trading at 30% or less than what we believe it's worth, we buy that particular security.
Linda, you've increased your offshore exposure within the fund.
Yes.
Having gone, can you just quickly chat about why offshore? Why have you made that decision? Earlier on in the show, we were talking about how strong the rand is, and the guys on the show were saying, well, the rand's trading closer to 7 rand to the dollar. That's a buying opportunity, thinking that the rand can strengthen back again. Offshore investing hasn't been a great opportunity. Why have you chosen to go offshore
And
now?
perhaps you can just throw some stats in there, because you've almost doubled your offshore exposure. If you look June 2010 on June 2011, you've gone from 15.8% in June 2010 to some 32.7%. So a big swing in your offshore equity exposure.
Absolutely. Well, if we look at the local and the global markets, both are actually overvalued. In the way that we look at investments, on the aggregate level, more things are trading at above what they're worth than below what they're worth. But the difference between the local and the global market is it's a much broader opportunity set. So amongst the global opportunity set, we're still able to find investment ideas which are trading at substantially less than what they're worth. Obviously, when we're looking at global ideas, we do need to take into account the currency. And there, what we rely on is the purchasing power parity relationship. And that does suggest over the long term that the rand is indeed overvalued. And so there, that reflects that longer term view. And the thing with value-based investing is it is over a full market cycle. It does take a longer term view.
And when, sorry.
No problem. Jump in.
When you're going offshore, where are you finding these opportunities? Are you finding them in developing markets, in developed markets? Or can you just chat about how you are you finding lots of opportunities internationally? I agree that they're probably more than locally.
Yeah.
But in what sort of market segments?
Okay, well, first of all, value-based investing is often aligned with contrarian investing. And the reason for that is our focus is on high-quality companies. And what do I mean by that? Companies with pricing power rather, sustainable competitive advantages, barriers to entry, all those things. And essentially, good quality companies don't become cheap when things are going well. So there has to be negative news, and essentially you need for things to be out of favor for them to be undervalued.
I'm going to ask you now to throw to some of the stocks in the global portfolio. So you've got Johnson & Johnson, you've also got Tokyo Gas. Perhaps that's going to help you illustrate what you are putting forward right now.
Absolutely. So those are a lot of the names that are quite unpopular today. And interestingly enough, these were the things that were very popular 10 years ago. So Johnson & Johnson is predominantly a pharmaceuticals company. And at the time, they were very overvalued 10 years ago, very much in vogue, lots of blockbuster drugs, etc. And other stocks that we hold, such as Dell, for instance, technology shares, were very popular during the TMT boom. Today, they're very much unloved, ignored, not in vogue. What is in vogue? Well, it's direct emerging markets. So to answer your question, we're finding more opportunities in developed markets. We do have exposure to quite a few US companies, high quality companies, but the key thing there is a company like Johnson & Johnson, for instance, has about 30% of its revenue coming from emerging markets. So you're accessing that at an undervalued entry point, and that's the key thing. You are buying a high quality company that's trading on a 13 PE, accessing those growing markets in the emerging market space, rather than paying far overvalued and expensive PEs for direct emerging market exposure with a whole host of other risks which we all know about.
Tokyo Gas, I was interested in that stock being in amongst your top holdings.
Absolutely. So Tokyo Gas is essentially a utility company. It's a provider of gas for Tokyo and the surrounding areas. Now, that's a very interesting example. So Tokyo Gas, during the earthquake situation, it fell with the rest of the market about 15% in a very short space of time when the market was panicking. Now, we'd already done our research on that, and as value-based investors, 100% of our effort is focused on what is this company worth. So the fact that we don't do the macro forecasting and all of that sort of side of things means we've got more time to focus on actually ascertaining what things are worth. We knew what it was worth, we knew that their facilities weren't affected, and that day the analyst sent around an email saying this is a buying opportunity, increase your exposure, and that's why you see it in our top 10 today.
Kevin, before I ask Linda about Telkom,
I was about to ask her
why they have Telkom in their top holdings, I want to get your view on Telkom. And why you don't hold Telkom.
I just don't, I understand why value investors, Linda's they're a value investor, so I can understand that there's a value argument and that you believe that there can be a value unlock. But what I hear as incongruent is it's a quality value, and I'm not convinced about that quality value because I'm just not convinced about the strategy that results in the unlock. In other words, you can take a stock and say this is cheap, but it's cheap for a reason. Does that reason change? What's the catalyst that unlocks value in Telkom? And when I listen to their strategies that they're trying to put together, I'm not convinced that there's a clear strategy. I'm not convinced that it's going to yield a much better result than what they've got now. In fact, they may end up destroying capital in that process. So I'm struggling to find what is the catalyst that unlocks the value.
Linda, it's a tough job to convince him on Telkom. It's trading just under 36 Rand at the moment.
Well, the easy part of my job is that I don't have to convince you it's a quality company, because we agree with you. It's not a quality company.
Okay.
And we agree that management have made some very poor choices. 30% of our portfolio, we are prepared to invest in companies that aren't high quality by the metrics that I mentioned earlier, but that are just trading at extraordinary low levels where they're priced for disaster. And so there's a difference between a good company and a good investment. A good company can be a bad investment if you buy it at a very expensive level, and a bad company, if you like, can be a good investment if you pay a low enough price for it. And we have priced into our valuation declining margins, loss of market share, a lot of the negative things that are espoused in the market, and we still come with a value that is much higher than the market price today. And that's essentially the argument there.
Is it possible then to, in your portfolio, give me an example of a value share that would be a quality share, or are you finding that those are actually very rare at the moment in the South African marketplace? Are most of the quality shares no longer necessarily value?
You're quite right that we are finding it difficult to find new investment opportunities in quality companies, but we do have some quality names in South Africa in our top 10. So examples of that, and we've held them for a while, so they're not trading at 30% or less to fair value, but they are trading still at a discount, and those would include names like Discovery, which is in our top 10, which do have barriers to entry, which do, we believe, have sustainable competitive advantages. Companies like Tiger Brands, companies like that we would say are high quality. Unfortunately, though, with the market in overvalued territory, it is difficult to find new investment opportunities locally, which is why our global equity exposure has risen faster than our local.
And we're out of time, but next time I'd like to talk about Amplats. I see that is one of your buys, one of the opportunities in the current investment cycle. Thank you very much for your time.